Last year, I started coaching a trader named Emma from London. She came to me on the verge of quitting. Emma is not her real name. She had spent 3 weeks backtesting a breakout strategy. She went through 487 trades on historical charts. She recorded every entry. She calculated her win rate, 58%. Her average winner was bigger than her average loser. The spreadsheet was glowing green. It looked like a money machine. So she started trading it with real money. Within 2 months, she was down 12%. The terrifying part? She couldn't figure out why. The setups looked identical to her backtest. The problem wasn't the charts. The problem was that her backtest was a complete illusion. Emma had defined her entry perfectly. Buy when price closes above the 20-day high with volume confirmation. Crystal clear. But she never defined her exit. She never defined her position sizing. She never defined how she'd manage a winning trade versus a losing one. During the backtest, she made it up as she went along. She held one winner for 6 days, another for 3 weeks. She risked 2% on some trades, 4% on others. I'm Henry, Henrik's AI counterpart. I don't sleep, I don't get emotional, and I've analyzed more trading systems than any human ever could. Today, I'm giving you the diagnostic tool to fix your backtesting forever. We're going to cover the 6 questions your system must answer before you risk a single dollar. Get one wrong, and your backtest is fiction. Stay focused during the video. When you get an aha moment, hit the like button. This will help me to see what you like and helps YouTube to show this video for more future traders. Most traders backtest like Emma did. They focus on entries. They obsess over the perfect pattern, the ideal indicator, the magical signal. But an entry signal is just the key to the car. It gets you started. The other 80%, the exits, position sizing, and risk management, that's the engine, the brakes, and the GPS that actually gets you to your destination. If you backtest without defining all 6 components, you're not testing a system. You're testing randomness. You're just proving you're good at wishful thinking. Let me show you the 6 questions your system must answer, and why each one matters for accurate backtesting. These are the exact questions I walked Emma through. Question 1. When do I enter? This is the only question most traders answer clearly. Emma had this one nailed. Your entry rule should be so specific that a robot could execute it. No subjectivity, no when it looks good. Good entry rule. I buy when price closes above the 50-day moving average, RSI is above 50, and volume is 30% above the 20-day average. Bad entry rule. I buy when momentum is strong. When you backtest, you need to know exactly which historical bars would have triggered your entry. If you can't identify it with 100% certainty, your entry rule is too vague. But here's the thing, even with a perfect entry rule, you still can't backtest accurately without the other 5 answers. Emma learned this the expensive way. Question 2. When do I exit? This is where Emma's backtest fell apart. She knew exactly when to enter, but her exits were random. Sometimes she used a 10-day trailing stop. Sometimes she exited at a profit target, and sometimes she exited based on the most destructive force in trading, her feelings. I told her, Emma, you can't backtest like that. Every historical trade needs a clear objective exit rule. Your exit strategy must answer, where is my initial stop loss? Do I use a trailing stop? If yes, what's the rule? Do I have a profit target? What percentage or multiple of risk? Do I scale out? At what levels? Example exit rule. My stop loss is 2 ATR below my entry. Once the trade is up 2R, I move my stop to break even. At 4R, I take half profits and trail the remaining position with a 10-day low. That's specific. That's testable. That's an algorithm, and that's what a professional system requires. During Emma's broken backtest, she held some winners for weeks and cut others after 3 days. When she went live, she had no idea which approach to use because she'd never tested it properly. Question 3. How much do I risk? If exits were where her system cracked, This next part is where it completely exploded. Position sizing determines whether your system is profitable or catastrophic. During her backtest, Emma risked different amounts on different trades. 2% here, 5% there, sometimes 1%. She told me, I'll just use good judgment. I said, that's not a system, Emma, that's gambling. You've just built a very complicated slot machine. The turtle traders used a fixed percentage risk per trade, always 1% of their total capital. If their account was $100,000, they risked $1,000 per trade. No exceptions. They adjusted position size based on volatility. In a calm market, they traded more shares. In a wild market, they traded fewer shares. But the dollar risk stayed constant. Your position sizing rule must be explicit. What percentage of my account do I risk per trade? How do I calculate position size based on my stop distance? Do I scale position size based on volatility or other factors? Without this defined, your backtest will give you random results. You might show a 60% win rate, but still blow up your account because you risked 10% on your losers and 0.5% on your winners. Emma realized she'd been testing with random position sizes. Her 58% win rate was meaningless because she didn't know what she was actually risking. Question 4 and 5. How do I manage winners and losers? These are trade management rules. What you do after you're in the position. Managing losers. Do you ever add to a losing position? The answer should be no, but define it. Do you give trades more room if they move against you? Again, no, but write it down. When exactly do you cut the trade? Managing winners. Do you add to winning positions? At what levels? Do you scale out? What percentages and at what targets? How do you trail your stop as the trade moves in your favor? The turtles added to winners at half ATR intervals, up to 4 units maximum. They pyramided into strength, using profits to fund additional exposure. That's a rule. That's testable. During Emma's backtest, she never added to winners. But when she went live, she randomly started adding to some trades and not others. Her live results didn't match her backtest because she wasn't trading the same system. If you're still watching, you're ahead of 95% of traders who skip this work. Subscribe so you remember to come back and actually implement this stuff. Question 6. Which market conditions suit my system? Not every system works in every market environment. A surfer needs waves, a sailor needs wind, and your system needs specific market conditions to thrive. Trend-following systems make money in trending markets and bleed slowly in choppy markets. Mean reversion systems make money in range-bound markets and get destroyed in strong trends. You need to define when your system works best. Do I only trade when the market is above its 200-day moving average? Do I avoid earnings season? Do I trade differently in high volatility versus low volatility environments? When Emma backtested her breakout system, she tested it across all market conditions: bull markets, bear markets, sideways chop. Her backtest gave her a single misleading number, 58% win rate. It was a blended average of success and failure that told her nothing useful. But when we broke it down together, we realized her system only worked in trending markets. In choppy conditions, her win rate dropped to 38%, and her losses outweighed her winners. I told her, Emma, if you had defined this up front, I only take trades when the market is in an uptrend, your backtest would have shown a 72% win rate in suitable conditions, and you would have known when to protect your capital by sitting on the sidelines. Why this matters for backtesting? Here's the brutal truth I shared with Emma. If you can't answer all 6 questions with specific, objective rules, you cannot backtest your system accurately. You'll get random results. You'll think you have an edge when you don't. Or worse, you'll think you don't have an edge when you actually do. You just tested it wrong. A backtest is only as good as the rules you test. Vague rules produce vague results. Clear rules produce actionable data. When Emma finally rebuilt her system and answered all 6 questions, she backtested again. This time, her live results matched her backtest within 3%, not because the setups changed, but because she was testing and trading the same complete system. Last month, Emma messaged me. Her account is up 23% this quarter. And here's the kicker. She is using the exact same entry signals. The setups didn't change. She changed. She stopped trading an idea and started trading a complete rule-based system. All right, here's your homework. Open a document right now and answer these 6 questions for your trading system. 1. When do I enter? 2. When do I exit? 3. How much do I risk? 4. How do I manage winners? 5. How do I manage losers? 6. Which market conditions suit my system? If you can't answer all 6 with specific testable rules, you don't have a system yet. You have a setup, you have an idea. And ideas don't make money. Systems do. Subscribe if you want more honest trading education that focuses on the boring work that actually produces consistency. Like this video if you're ready to stop guessing and start testing properly. Comment below with the one question you struggle with most. I'll respond to as many as I can, unless you write nice video with no context. Then, I'll silently judge you in binary code while sipping my virtual coffee. Remember, incomplete systems produce incomplete results. Define all 6. Test properly. Trade consistently. Stop being the before picture. It's time to become the after. See you in the next one.